Right now, thousands of people are watching Forex success stories and thinking, that could be me. The Lambo, the hotel suite, the phone screen showing four-figure profits. One after another, they keep appearing. And here is what nobody tells you about what you are actually looking at. You are not seeing reality. You are seeing a carefully constructed illusion. That illusion has a name: survivorship bias. And it may be the most expensive trap in all of personal finance. I will show you the mathematics of why your social media makes it look like everyone is winning, and why that appearance is a statistical lie. Let me start with a story from 1943. The United States military has a problem. Bombers are being shot down over Europe. They need to add armor to the planes, but armor is heavy, so they must choose wear carefully. They study every returning aircraft and map each bullet hole. Wings and fuselage show the most concentrated damage. The logical conclusion: armor those areas. That is where the enemy is aiming. Then a statistician named Abraham Wald says something that changes everything. He says, the bullet holes on the return planes show where a plane can be hit and still fly home. The planes that were shot down were hit somewhere else. The engine, no holes there because planes hit in those places never came back to be studied. The dead planes were invisible to the analysis. The military was building its entire strategy on an incomplete sample. Only the survivors were visible. This is survivorship bias. This is exactly what is happening on your Forex social media feed right now. The winners you see posting are the planes that came back. Real. But only a fraction of the total population of traders. The other traders, the ones who lost everything, are not posting. They deleted the app. They are the invisible planes. European financial regulators require brokers to publish the exact percentage of retail clients who lose money. The number is between 70 and 80%. Required legal disclosure from real brokers, not an estimate. 7 out of every 10 retail Forex traders lose money. Not most, the statistical majority, confirmed by law. But look at your Instagram feed. Does it look like 7 out of 10 people are losing? No. That gap between statistical reality and what your feed shows you is the most dangerous gap in financial education. The 700 who lost are silent, embarrassed. They deleted the app and do not want to talk about it. The 300 who made money, at least some of them, feel validated and post about it every day. So the content you consume is drawn almost entirely from the 30% who had positive results. Your algorithm sees what you... The selection is not random. It is systematically biased toward survivors. That is the engine of the illusion. Imagine 10,000 people each flip a coin 10 times. By probability, some will flip 9 or 10 heads in a row. Those are the ones who post about their system. The others stay quiet. This exact dynamic plays out in Forex every single day. The difference is that the stakes are real money and real lives. Layer 1. The selection of who posts. Not all winners post. Many profitable professional traders are completely private. The traders who post most actively tend to be the newest to success, the most excited, and the most motivated by external attention. This means the sample of winners you see is not even a random sample of winners. It is a sample of the loudest ones. Layer 2. The selection of which results get shared. Even among active posters, not every trade makes it onto the feed. A trader may take 30 trades in a month, have 18 winners and 12 losers, and share only the 18 winners. Their feed looks like a 100% win rate. The follower sees this and thinks, this person never loses. This person has a perfect system. What the follower is actually looking at is a curated gallery of one side of a two-sided reality. Layer 3. The selection of which time period gets highlighted. A trader might lose money in 11 out of 12 months, but in the 1 month they made money, they post every single day. The full year account is down 60%. The social media presence looks consistently profitable. You see the frame they chose to show you. Not the year, not the 5 years, just the 1 good month. These 3 layers combined form what I call the triple filter. Layer 1, who posts? Layer 2, which trades get shown? Layer 3, which time period gets highlighted? The triple filter transforms a statistical reality where most traders lose into a perceived reality where everyone on social media seems to be winning. And here is the part that makes this genuinely disturbing. Most of this is not intentional deception. Most traders who post their wins genuinely believe they are winning. They are not deliberately lying to you. They have not examined their full account history. They are living inside their own highlighted frame. They are showing you the bullet holes on the planes that came back. They cannot show you the planes that never returned. They cannot see those planes themselves. The dead planes are invisible to them too. The individual pieces of this system are not malicious. The aggregate result is a complete distortion of reality. A study observing 100,000 retail traders found that top 1% performers in a given year had only a 14% chance of remaining in the top 1% the following year, largely random. The question is not whether the winners on your feed are real. Some of them genuinely are. The real question is, what is the complete population they were selected from? And what happened to the rest of that population? The cemetery of blown accounts is real. You just cannot see it because no one posts from there. In the next part of this video, I'm going to show you exactly how large that cemetery is and why the stage with the Lambos is smaller than you think. Let me paint you the full picture of what is actually happening. Imagine a vast dark field stretching in every direction as far as you can see. In this field stand hundreds of thousands of simple gravestones. Each one marks a blown Forex trading account. The names on those gravestones are not famous. They are ordinary people who found Forex on social media and believed what they saw. In one corner of this enormous field, there is a single, brightly lit stage. Spotlights, confetti, the kind of light that demands attention from miles away. On that stage stand 3 traders. They are loud. They have Lamborghinis. They are pointing at phones, showing enormous profits and saying, "This is easy." The stage is real. The profits on those phones may even be real, but the stage is tiny. The field surrounding it is almost impossibly large. The camera angle on your social media has been set to show you only the stage. The vast dark field of gravestones behind it has been deliberately cropped out of the frame. This is not an accident. It is the natural economics of attention in a market where money follows belief. A trader who loses money has nothing to sell. No course, no Signal subscription, no mentorship program. They have no economic incentive to post. A trader who claims to make money can sell access, course seats, dream futures. Their social media presence is not personal expression. It is advertising. This creates a powerful selection effect. The people with the most motivation to post are the people with the most to gain from you believing they are winning. The Forex content ecosystem on social media is not a representative sample of all Forex traders. It is a sample of Forex marketers. That distinction changes how you read everything. A 2021 analysis of 2,700 Forex trading accounts found that top performers in one calendar year showed zero statistical correlation with top performers in the following year. The winners rotated almost completely at random. You might be thinking, but I have followed this one person for 2 years and they keep winning. Let me explain why that observation is almost certainly misleading you. This is where survivorship bias gets compounded by a second cognitive error, confirmation bias. Confirmation bias means you actively seek out information that confirms what you already believe, and you dismiss or ignore information that contradicts it. When you see a winning trade post, you engage with it. When a loss is mentioned, you scroll past. The algorithm learns this pattern and amplifies it. Over time, your feed becomes a completely closed loop of winning. Not because winners are the majority, because the algorithm has filtered losers out of your visible universe. Before I continue into the deeper mechanics, I want to pause briefly. On my Telegram channel at FX's Austin, I post every trade I take, not just the winners, the losses, the misses, the setup that triggered and went wrong. That is what transparent, forward-tested trading documentation actually looks like. The full picture, unfiltered. It is completely free. Link is in the description below. Back to the complete mechanism. Survivorship bias creates the initial distortion. Social media economics amplifies it, and confirmation bias locks it in place. This 3-part trap works on smart people, educated people, people who pride themselves on critical thinking. Because the distortion does not feel like a distortion. It feels like evidence. Your feed genuinely looks like proof that winners are everywhere. Now I want to give you a concrete 5-question framework for evaluating any trader you see online, because some traders do have real edge. The question is how to tell. Question 1. How long is their verified track record? Not screenshots, not testimonials, verified, documented trading history. A 6-month track record of wins means almost nothing statistically. At 6 months, a coin flipper with lucky timing can produce results that look exceptional. The minimum threshold is 2 to 3 years of documented trading before random luck becomes statistically distinguishable from genuine skill. Question 2. What is their documented maximum drawdown? Has it been shown publicly? A trader who shows only profits with no documented losing periods is not showing you a real track record. They are showing you a curated highlight reel. Question 3. Have they been independently verified? Not by their followers, not by social proof, but by a third-party auditing service. There are services that independently verify trading performance with full access to broker records. A trader with 3 years of independently verified results has made a real claim. Question 4. What is the primary source of their income? Is it trading profits, or is it selling courses, signals, and mentorship programs? A trader whose primary income comes from selling access to their methods has a financial incentive to maintain the appearance of performance regardless of the actual result. This is not an accusation. It is simple economics. When you understand where the income comes from, you understand the incentive that shapes the content you are seeing. Question 5. Do they publicly document their losses? A real trader takes losses. The question is whether those losses appear in the public record alongside the wins. If you cannot find a single documented loss in a trader's public trading history, you are not looking at a trader. You are looking at a marketing operation. Now let me show you what the mathematics of random outcomes looks like in trading specifically. This is the piece that makes the survivorship bias illusion most convincing. In any population of 10,000 traders, using random strategies with no skill component whatsoever, purely by the laws of probability, some will produce outstanding results for 6, 12, even 18 months. The returns generated by those lucky streaks can be genuinely spectacular. 200% in a year, 500%, occasionally more. Those results are not fabricated. They are real returns, but they are the product of random variance operating across a large enough population, not repeatable skill. The only mechanism that reliably distinguishes skilled traders from lucky ones is time, large completed sample sizes, and independent third-party verification. None of those mechanisms are available to you in a social media post, which is why social media is structurally incapable of showing you skill. It can only show you results. To distinguish a skilled trader from a lucky one with 95% statistical confidence requires a minimum track record of 3 years and at least 500 completed trades. How many traders you follow have published that verified record? Count them. Real edge in trading does not look like what social media shows you. It is smaller, it is slower, it is less dramatic. Real edge looks like 15 to 30% annual return achieved consistently over 5 to 10 years with controlled and documented drawdowns. Professional fund managers consider this extraordinary performance. That is not glamorous. It does not get posted next to a Lamborghini. It does not sell courses, but it is real and it is reproducible. The traders who have genuine long-term edge are almost never the ones who are loudest on social media. That inverse relationship is not a coincidence. There is one more layer to this that most analyses of survivorship bias fail to mention, and it is the layer that affects new traders most directly. The social media winners are not just misrepresenting their own results, they are misrepresenting the conditions that make those results possible. When a winning trader posts a single profitable trade, they do not show you the 10,000 hours of screen time behind it. They do not show you the failed strategies they went through first. They show you the result, not the process. And result without process is the most dangerous kind of information there is. You cannot replicate a result by seeing only the result. You replicate a result by understanding the entire process that produced it. And the process behind real trading results looks nothing like social media. It is slower, harder, and far less cinematic than any Instagram post suggests. In the final part of this video, I want to show you what that honest process actually looks like and what the path forward looks like for someone who understands all of this. The honest path toward real trading skill begins with understanding what it actually is and is not. Real trading skill is not a secret strategy. It is not a hidden indicator. It is not knowledge that someone is selling in a course for $497. Real trading skill is the result of thousands of hours of deliberate practice, systematic review of trades, and disciplined risk management applied consistently over years. The traders who have built that kind of skill went through a specific process, and almost none of that process is visible on social media because it is not visually interesting. They spent months or years learning price action, market structure, and how different sessions behave. They built, tested, and discarded multiple strategies before finding one with verifiable edge. They kept a detailed trade journal, reviewing every single position, including the losses, especially the losses, because losses contain information that wins do not. They experienced significant drawdowns and survived them with discipline, not by increasing position size to recover faster. None of this is glamorous content. None of it goes viral. None of it gets posted next to a Lamborghini. This is why you have never seen it in your feed. The survivorship bias does not just filter out the losing traders. It filters out the slow, grinding, unsexy process that even the winning traders went through before they started winning. So what you are left with in your feed is the arrival without the journey, the result without the process, the destination without the map that got them there. This creates a second order trap, because if you believe that winning traders simply had the right strategy from day one, then the logical solution is to find and buy the right strategy, which is exactly the product the marketing operation around Forex is set up to sell you. The course with the strategy, the signal service, the mentorship program. The structure of the information environment you are operating in has been designed around this single cognitive era. And now you can see the architecture of it. I want to pause here and make a distinction that matters. Not every trader who sells education is operating a marketing scheme. Some of them have genuine knowledge worth learning. But the way to evaluate that is not to look at their trading results on Instagram. That evaluation framework is the wrong tool for the question. The right questions are the 5 I gave you earlier: verified track record length, documented drawdowns, independent verification, income source, and publicly documented losses. Apply those questions to anyone claiming to teach trading, regardless of how compelling their testimonials are or how impressive their posted trades look. Now, I want to bring this back to the original image, the cemetery and the stage. We began this video with the question, why does everyone on Instagram seem to be winning at Forex? You now have the complete answer. The winners you see are not a representative sample of all Forex traders. They are a self-selected group of the loudest survivors, amplified by platform economics and your own confirmation bias. The cemetery behind the stage is real. It contains the vast majority of retail Forex participants. The names on those gravestones are ordinary people who believed what their social media feed was showing them. And the 3 traders on the stage, even if their profits are real, are either the product of survivorship bias, random variance, or genuinely skilled traders whose path to that stage was nothing like what their posts imply. Understanding this does not mean Forex trading is impossible. It means the bar is higher and the path is longer than the social media version suggests. It means you need to approach it differently, with skepticism toward unverified claims, with a framework for evaluating what you are seeing, with realistic expectations about the timeline and the difficulty. Before I close, I want to briefly mention my Telegram channel one more time. At FX Austin, you will find forward-tested trading documentation with full transparency. Every trade, every outcome, the real picture of what trading looks like from inside the process. Not a highlight reel, not curated wins. The actual work, documented as it happens. It is free. The link is in the description below this video. I want to close with one final observation. The fact that you watched this video to the end means something. It means you are approaching this with a level of critical thinking that most retail participants never apply. You ask the right question. Why does everyone seem to be winning? That question is the beginning of the correct framework. The traders who eventually build real skill are the ones who start by questioning the environment they are in, not by accepting it. The most dangerous version of you as a trader is not the one who loses money immediately and stops. That trader learns a real lesson and often comes out with useful knowledge about risk. The most dangerous version is the one who believes the social media narrative, keeps buying courses, keeps following signals, keeps looking for the strategy that the winners have found, and never questioning whether that framework is correct at all. So here is what I want you to take from this video. Not a list of trading tips, not a strategy, not a method, a mindset. When you see a trading result posted on social media, ask, am I seeing the complete picture, or is this image cropped to hide the cemetery behind the stage? When you are evaluating a trader or educator, apply the 5 questions. Verified track record, documented drawdowns, independent verification, income source, documented losses. When you feel the pull of confirmation bias, making your feed look like proof that winning is coming, remember the math. 70 to 80% of retail Forex participants lose money over time. The stage is real, but it is small, and the field around it is vast. The camera angle on your phone is not showing you the full picture. If you are serious about developing real trading skill, the starting point is not a course or a signal service. It is building your own systematic process. A demo account for at least 6 months with documented, consistent results before any real capital. A trade journal from the first day, capturing every entry, exit, reason, and outcome. A defined risk management framework, maximum position size, maximum daily loss limit, rules about when not to trade. Written down before you start, not invented after a loss. And time. Enough time for the market to show you whether your edge is real or whether you have been getting lucky. The minimum meaningful test period is 2 years of live trading at small position size. That path is not fast, it is not cinematic, it will never go viral. But it is the path that the traders with real long-term results actually walked, whether they show it on social media or not. The survivors on the stage arrived there through a process. The process is not a secret. It is just slow, disciplined, and undramatic enough that nobody is building an audience around documenting it honestly. You now know that, and that knowledge is more valuable than any signal service or course currently being sold in your Instagram feed. Next time you open Instagram and see a trader posting profits, you will not see what you used to see. You will see the stage, and you will know how large the field behind it actually is. That shift in perspective is worth more than any strategy, because it changes the questions you ask before you risk a single dollar. And asking better questions is how you avoid becoming one of the gravestones. Thank you for watching. If this shifted your thinking in any way, there is more like it on this channel. And if you want to see what consistent, transparent trading documentation looks like, FX Austin Telegram is linked in the description. I will see you in the next video. And remember, survivorship bias does not only exist in Forex. It shapes every high failure industry where visible winners are a tiny fraction of all who tried. Startup success stories, fitness transformation photos, weight loss testimonials, tiny stage in each case, vast field hidden behind it, same camera angle set to hide the field, wide aerial shot, 2 views of the same world. On the left, the dark cemetery stretching to the horizon, hundreds of thousands of gravestones representing the true odds. On the right, the same world but with the camera tightly cropped on the bright stage. 3 winners with Lambos, no cemetery visible at all. Same world, different frame. Underneath, the words. The odds have not changed, only the angle of the camera. Choose your angle carefully. Fade to black.